Right, I think it's about 2 minutes past. Christian, think we should start? So hi, welcome guys. So my name's Hannah. I'm the relationship partnership manager here at Social Investment Business, and I'm alongside my colleague Christian. So we're going to be talking about the cost of living fund today. Christian's going to introduce it. Christian's going to introduce who we are, our background, and then I'll kind of come on to the cost of living fund later on in the webinar. So Christian, are you ready?
I am sorry, I'm just putting my phone on silent as it just pinged. Good morning, everybody. Just to let you know, obviously, I know there's people in the room. I can't see you, so I always find this quite difficult. But yeah, I'll kind of struggle through. Like Hannah says, my name's Christian. I'm a senior relationship manager here at Social Investment Business. So I do three things mainly. I look at the assessment of obviously applications. I manage a loan portfolio of investments that we've made, and I do some stuff around new business and going out and actually finding kind of deals and sourcing pipeline. So like Hannah said, I'm going to tell you very briefly a little bit about who we are and what we do. I know you're all here to listen about cost of living fund, but I do think obviously putting in a little bit of context is useful. So you've got me for a couple of minutes. So anyway, so who is the Social Investment Business? Some of you may have heard of us, some of you may have not, but we are one of the UK's longest active social investors. We've been going for 22 years now, so we've been around quite a long time. And in a nutshell, what we do, we support charities and social enterprises to build stronger and fairer communities. And the way we do that is by providing funding and support. Funding is an important part of it, but we break that down into two main areas. So we work across three areas. Grants. So we do grant funding. Typically and historically, they've been around things like investment readiness. So that's helping people get ready to take on social investment. We do grants as part of a larger investment package. So sometimes you'll hear the term blended finance. That's where a social investor will give you a loan and some grant funding. We still do grant management for other organisations, and since 2022 we've delivered the Youth Investment Fund, which is a 400 million large-scale capital grant fund for organisations which deliver services for young people. So grants is an important part of what we do. Data. Over the last 5 years, we've heavily invested in our data and learning team. And the reason we did that, we recognised that we could better shape the services that we provide. We also host a number of cross-sector initiatives, all with the aim of improving the social investment market, so the market itself. But by doing that, we can get more funding to the organisations who are delivering services for people in need. If you're interested in more about our data and the way we use that, if you have a look on our website, some really good kind of data dashboards there. We are very transparent. So everything that we do, we put it on the website so people can kind of go in and interrogate that as well. The core business of what we do, so the main thing that I'm involved in is the investments. So this is your repayable finance. Sometimes sits alongside a grant, sometimes it's just a standalone repayable loan, but again that feeds back into our main mission, which is to provide the funding to organisations that make up the social economy, to give them the tools and give them the ability to make a positive difference to the communities they work with as well. So again, sitting alongside grants, it's about funding to organisations that need it to be able to deliver services. I know we're here to talk about the cost of living fund, but I thought I'd very, very quickly just run through a couple of other loan funding products that we have in the moment. So we have the Thrive Together Fund. This provides investment of between 25,000 and 150,000. That's a blended product, so 20% of any of that investment is going to be a grant, and that's just for organisations looking to grow or diversify income models. We have a flexible finance fund, so that's a grant that sits alongside the Recovery Loan Fund, and that's specifically for organisations which are Black and minoritized ethnicity led, and who have never borrowed before. So again, it's a grant that sits alongside the loan, and with that one, it can provide grants of up to 100% of the loan amount. So as an example of an organisation was coming to us and they wanted 50,000 of loan, and they qualified for the Flexible Finance Fund, they could also get up to £50,000 worth of grant. And what we've also done, we relaxed the criteria for that one, for those organisations. So things like turnover levels and minimum levels of investment is slightly lower. I think it's important to say the reason why we did that, and it kind of feeds back into the data thing. A couple of years ago, we ran a fund called the Resilience Recovery Loan Fund. And when we looked at the data for that, 25% of all organisations that applied were from BEME-led backgrounds. They only accounted for 3% of the organisations that we funded. And there's all kinds of well-known historical reasons why those organisations aren't accessing social investment. We decided to do something about it, which is why we launched the Flexible Finance Fund. I'm very pleased to say that now 51% of applicants to the fund are from a BEME-led background, and actually 25% of the organisations that we funded are the same. So that's been a real turnaround on that one. The Recovery Loan Fund, so this is the one that, so this is a loan fund, sits alongside the Cost of Living Fund. So I'm going to talk about this one in a little bit more detail. Again, it's for charities and social enterprises who are improving people's lives or the environment that they live in. And it can be used for pretty much anything. It can do refinance of existing loans. It can do obviously new services. It can be used for buildings. It can be used for kind of development capital, cash flow, you know, whatever you think of. Yeah, it can be used for that. And it provides investments of between £100,000 to £1.5 million. There's a repayment term of up to 6 years, but that does include the option of a 12-month capital repayment break. So if you take the investment and you're, investing in a new service and it's going to take a while to bring that online, you can make interest-only repayments for the first 12 months, that's fine. It has a fixed rate of interest, which is 7.9%. You only ever pay interest on the balance that you owe, so it's done on a reducing basis, which we find is the fairest way of doing it, and not what all social investors do. There is an arrangement fee. It's 3% for loans of less than £500,000 and 2.5% for loans of obviously more than £500,000. But that can be added to the loan amount. So yes, you do pay a fee, but if you don't have the ready cash to pay that, we can add that to the loan. In terms of security, any loan under £250,000 are unsecured. Typically, any loans more than £250,000, we would look to take a fixed and floating charge. We can make exceptions to that, but it would be incredibly rare. But yeah, anything less than £250,000, there is no security. And really, the key eligibility criteria is a charity, social enterprise, and you need to have a minimum turnover of at least £400,000 in the last financial year, and you need to have been operating for at least 2 years. There is some excluded sectors, but things like insurance brokers, public sector bodies, kind of secondary schools. Most of the organisations that we speak to, as long as they hit the eligibility criteria in terms of how long they've been going and that £400,000 obviously turnover limit, then they do tend to be eligible. So like I said, obviously the whole reason here is to hear about the Cost of Living Fund, and Hannah's going to talk you through that one. But I thought it was worthwhile going through Recovery Loan Fund in a little bit of detail because, they're not standalone products, they do come together. But Hannah can tell you a little bit more about that. So over to you, Hannah.
Thanks, Christian. So the Cost of Living Fund. So the Cost of Living Fund, so it was created towards the back end of last year in response to some data and documents that were published by the government stating that the poorest household in the UK are the worst affected by the cost of living crisis. The increase in price in essential amenities has been disproportionately felt by those on the lowest income. So on behalf of the Social Investment Forum, SIB coordinated a survey to go out to an array of charities and social enterprises who were experiencing the aforementioned. And it was found that the cost of living crisis also impacted delivery of services, including the staffing and the quality of services that the charities and social enterprises were delivering. It impacted the demand for delivery as more people were relying on the services, which includes mental health services and food banks, etc. And it also impacted the demand for specific services such as hospitality and leisure. They weren't getting the footfall that they were used to. And obviously they've had to pay their ever-increasing bills. So the Cost of Living Fund was created. As you can see, it's designed to continue an organisation's existing products or services, increase the number they support, launch new products or services, and improve the quality or efficiency of products and services. So, eligibility. So, like Christian said, it does stand with the Recovery Loan Fund. So it is a blended product of loan and grant. To be eligible, you must operate a percentage of your service in the IMD areas of 1 to 3, and the grant should be used to help your organisation to better support people impacted by the cost of living crisis. So the grant aspect is designed to support organisations to continue their existing products or services, increase the number of people supported, launch new products or services, or improve the quality or efficiency of products and services. So like I said, it does sit alongside the Recovery Loan Fund. And just to kind of rehash what Christine did say and what's written as well, you have to be incorporated voluntary community or social enterprise organisation, minimum of 2 years operating activity with a turnover of 400k in the last financial year, or 200 if the organisation is BAME-led or based in Scotland and Wales for Recovery Loan Fund. And that spills over into the cost of living as well for eligibility. So what could you receive? So like I said, it is a blended product of loan and grant. So you can receive anything from 150k to 1.5 million in loan funding, and from 10k to 250 in grant funding. So it works out at the grant funding being around 20 to 50% of the loan product. But that's decided on a case-by-case basis with our investment committee. So the relationship manager that you will have at SIB will make a case on your behalf, figure out kind of what it is that you need, take it to the investment committee, and together they'll decide on how much grant would be eligible. The repayment loan and recovery loan fund is between 1 to 6 years, and it does have an optional 1-year capital-free holiday for the first year. And the loan can be used for anything. So it can be used for refinancing existing debt. It was actually created in response to COVID. And so it was for anyone affected by COVID, but who hasn't been and what organisation hasn't been. So we have just said that it can be used for anything. The grant, however, the cost of living fund grant is restricted. So it should only be used to maintain, increase, improve or launch services. And it has to be spent within the first 12 months of it being dispersed as well. So that's a very, very broad overview of why we're here today, what the cost of living fund is, and what the recovery loan fund is as well. So I am just going to stop sharing now. And I can finally see the room because I was just kind of staring at myself and staring at the screen for quite a while. So yeah, like I said, it was a very pit stop overview of the cost of living fund. And yeah, I'm just happy to answer any questions that people might have. If you want to put them in the chat, if you want to just unmute yourselves and say them out loud, that's fine. I do have a few questions prepared, so I'm happy to ask them to Christian and he can answer for the room. But I'll give it a minute and see if anyone wants to put their hand up and just ask any questions. Hi, Vanjita.
Hi. Let me see whether my camera is working or not. Hi.
Hi, morning.
Hi, morning. It's regarding the other funding because we don't have the turnover of 400k, so we are not eligible for the cost of living fund. But in regards to the Thrive Together fund or recovery loan fund, is it limited to any specific area, Scotland or Wales, or it's eligible criteria? I mean, the London people can be eligible for it. I mean, question to Christians.
No problem. So Thrive Together, with that one, you have to have a minimum turnover of, is it 200,000? I think it's 200,000. Sorry, I've been thinking about all the different funds this morning, thank you, and my mind's just gone blank. So Thrive Together, yeah, it's a minimum turnover of 200,000 and a minimum investment of 25. So Thrive Together, because of the grant element and the way that funding works, it is only available in England.
Okay.
Sorry, the minimum turnover is 100,000, sorry. So for Thrive Together, you need to be based in England and you need to have a minimum turnover of 100,000 and you need to have been going for at least 2 years. Can I ask where you're based?
We are based in London.
All right, okay. The majority of our funds have always been England based. And the reason, we do now offer loans in Scotland and Wales, but with the grants, because they have a different statutory of regulatory framework, and because obviously the devolved parliaments, we can't do grants in those countries. But yes, in terms of Thrive funding, as long as your turnover is more than 100,000, you will be eligible.
And what about the recovery loan fund?
So for recovery loan fund, the normal turnover requirement is 400,000. Again, we relaxed that though for organisations which are black and minoritized ethnicity led, and the minimum turnover for that one is 200,000.
Okay.
So if you're from one of those kind of BEME led organisations, your turnover is more than 200,000. And as long as you've never borrowed before, we discount bounce back loans and directors loans and things like that from there. But yes, as long as you're hitting that £200,000 turnover, you will be eligible for recovery loan fund and flexible finance.
Okay, thanks very much. Thank you.
And what I would say as well, if anybody wants to have like a follow-up conversation after this, obviously Hannah will share our contact details, and Hannah and I are more than happy to have any conversations offline as well, or if there's any other questions.
Please, I will contact you because I am looking for and I'm making queries everywhere.
Fine.
Because we are such a small organization, so not eligible for a lot of stuff. So it's kind of
and I mean, what's really great, I mean, historically there's been very few social investors wanting to invest anything less than about £50,000 because of financial rates of return and stuff like that. There's been a lot of grant money coming into the sector recently, which means we can now provide blended finance products, that loan and grant, which is really great because what that does, it means we can lower our minimum investment amount, which is why Thrive, like I say, it starts at £25,000. It's really good.
What I'll do is I'll put mine and Christine's email addresses in the chat now so that you've got them.
Thanks very much, Anna. Thank you.
Christian, so just a quick one. I think it might be useful to talk about the application process.
Yeah.
To people in the room. Do you want to take us through that?
Yeah, so application process, like all of our funds, it's really, really, really easy. The days of kind of doing 15-page application forms are thankfully gone. It's good obviously for applicants because I don't have to fill them out. It's good for me because I don't have to read them. It's an expression of interest. It's on our website. It takes about 20 minutes. And all we ask for is some information about who you are, what you do, what you're looking for, what the investment will allow you to make, what will allow you to do. In terms of information you need to provide, we need your last 2 years of statutory accounts, which you will have in anyway. We need your latest management accounts, and we always ask for a minimum 12-month cash flow forecast. So, the information ask isn't overly onerous, I don't think. It takes you about 20 minutes to do. Obviously, it comes through our CRM system. It's then assigned to somebody like me, a relationship manager, who will pick up the phone and start those conversations. We often describe that EUI as it's the start of the conversation. It's not an actual application. Comes with a relationship manager. They will talk to you about who you are, what you do, what you want. They'll kind of review the financials. We'll ask you about the enterprise. When we talk about the enterprise, we're talking about the people involved. We talk about your senior management team, your governance. We're very, very interested in, the impact that you deliver. I think people are quite often surprised when I say, when I go to investment committee, yes, we get lots of challenge around the finances and, how these investments are going to be repaid. We get just as much challenge on the social impact piece. And in terms of the number of people you're delivering and how your organizations run. So depending on you and depending on how straightforward the ask is, assessment can normally take, I mean, if it's straightforward, it can take about a week. If it's a bit more convoluted, it can take about a month. Investment committee meets every month. So you're not waiting around a quarter, obviously, for an investment decision. So relationship manager will work with you. Will tell you, obviously, whether they think it's obviously something that can write a positive recommendation for. Write it up, put it in front of investment committee. And then, once approved, typically the funds are with you within kind of 2 weeks. So yeah, it's fairly light touch in terms of the actual application process.
Thanks. Is there a deadline for applications? If people wanted to get applications in, is there a cut-off date by any chance?
In terms of the cost of living fund, if you look on the website, it says that we have the funding until the 31st of December this year. My advice is because that money is kind of first come, first served. My advice would be to get it in sooner rather than later. And certainly if you have a firm interest, to try and get it in within about the next 4 to 6 weeks. And again, I go back to my offer. If anybody's thinking, is this the right fund for us? We don't have much time to kind of work through it. Have a conversation with us. And again, do that sooner rather than later, because like I said, it is a limited pot of money. It's not going to be there forever. So if you think if it's of interest, let us know sooner rather than later.
I think as well, it might be useful to speak about the IMD areas a little bit. So I know that I mentioned with the organisation has to operate in an IMD area between 1 to 3. That doesn't necessarily mean that you have to be registered there. So you can be registered in a different postcode area, but operate in IMD area 1 to 3. And the way to test that and to see if you are is I have put a link in the chat to our cost of living funding page online. There is a link on that page where you can actually put in your postcode and see which area it comes out to. Do you think there's anything more to add on the postcodes, Christian?
Yeah, I mean, obviously for organisations that operate in, kind of more than one postcode, so your head office may well be sitting in IMD 7 or IMD 6 or IMD 5 or IMD 4. It might be that your delivery services out in the community. And if that's data that you track, you can use that postcode and we can base it on that postcode. I think the other thing to mention is, the majority of your service users need to be in either IMD 1, 2 or 3. The majority would define that as 50%. So, even if you do have some delivery in areas that isn't IMD 1, 2 or 3, that's fine, as long as the majority of what you're doing it is in one of those kind of impacted areas. And again, there's an IMD lookup tool. If you work across 10 postcodes, you can put those 10 postcodes into an Excel, you upload it to the website, and about 20 seconds later, it will just spit out which IMD areas is. It's really quick, it's really simple. If anybody needs help with that, I can point them in the direction of it, or I can do it for them. And then it's just about making the case around the IMD area.
And just to go back to, obviously, with the cost of living fund, it's not a standalone product. It is tied in with the recovery loan fund. I know that myself and Christy mentioned that the recovery loan fund can be used for anything, such as refinancing an existing loan. Christine, could the grant aspect, could the cost of living grant be used to refinance existing loan as well, or would that have to be solely the loan?
That would be nice. That would make getting the funds committed a lot easier. No, the grant can't be used for refinance, and obviously the reason is it's been launched to help mitigate the impact of the cost of living crisis on the people obviously worst impacted, which is where the IMD 1, 2 and 3 thing comes from. But there's nothing to stop people if people are sitting there with existing loans, if they want to refinance them, we can do that onto the recovery loan fund, but then the grant can be used for something else. So it could be that the grant's used, again, it goes back to those 4 areas that be used for maintaining services, introducing new ones. So the loan can be used to refinance any existing borrowing, and the grant has to do something related to the cost of living fund. So yeah, the short answer is no, it can't be used to refinance, but it can be, because it's so general in terms of what it can be used for, most people can find an argument to say, but we could use it to do X, Y, Z, and that's fine.
Thank you. I've been keeping an eye on the chat and I've not seen any questions so far. Does anyone have any questions? I'll give it a minute or so. Happy for you to put it in the chat, and like I said, happy for you to unmute and ask us directly as well. I think from the dead silence, I don't think anyone's got any questions, which sometimes is a good thing, sometimes isn't. But
Maybe we did such a good job of explaining it.
we did, yeah. Well, I've put my email address in the chat, and I put Christine's in the chat. So if you do want to discuss the cost of living fund further, or any other fund further, if you want Thrive Together or Flexi Finance or Recovery Loan Fund, please just pop us a message, and we're happy just to have an informal chat. Yeah, and we can get something in the diary. So if that's everything, and if no one has any questions, I think we're good.
Good.
Amazing. Thank you so much, guys, for coming. I really do appreciate it.
Thanks for your time, everybody.
Have a lovely day.